Hi guys, good evening. Can you hear me, guys? Everybody, can you hear me clear, loud and clear? Okay. Okay, beautiful. Okay. So how many of you are for the first time? How many of you are first time or first time you have come to the Q&A session? Mutual fund session 1.2 mutual funds videos. First time or first time or okay. Okay, so I think there is some concern, right? Okay, I'll discuss it. Okay, okay, a lot of you guys. Okay. Okay. Good evening, Guruji, good evening. Everybody, good evening. Okay, so this, okay, just a moment, this mutual session 1.2 mutual funds video, it's not running. Anybody else is facing this problem? Mutual fund video is not running. I met someone today and he explained me about 936 LIC policy. Okay, Dr. Vinayak. Okay, we'll see that. What is that? First timer. Okay, thank you so much, guys. Thank you so much. Okay, so you see, first timer, for a first timer, let me tell you how it goes. This Q&A session. First, I will see all the questions that I have received while you were while you were going through the videos. Then I'm pretty sure you must have seen that. What you must have seen that where you can post your questions relating to that particular session. Okay, so first I will take those questions. Okay, those questions are important, but you need to be here. Those who have asked this question, ask the questions, you need to be here. So first I'll check all these questions, so it's there in my mobile, right? So once those questions are finished, then I'll straight away I'll discuss with you. Okay, I'll take your questions. Okay, log in for the first time. Yeah, Mr. Mahantesh, welcome. Right. Okay, now tell me, who is somebody is Gurjit, right? Yeah, Gurujit. Gurjit is facing that issue. This one. What issue? This session 1.2 mutual fund is not working. Okay, just a moment. Just let me check just right away. Okay, just a moment. Okay, why you are not content? Right? You have content. Because of course, again, we have done some updation today. Today you see, this video we have changed. Retirement planning we have changed. We have updated it. We have given a new video. So might be because of that. So you are saying which one? 1.2 mutual fund. This one? Gurjit, this one is not working. Can you confirm, please? Okay, just a moment. Okay, yeah. 1.2 mutual fund. What is the issue? Yes, it's not working. That's strange. So you also face the same issue with me also buffering only. Okay, is it that while updating, okay, did I accidentally deleted it or something? 1.2 mutual fund, right? Okay. Thank you so much. Okay, I'll look into it because I'll see it. Okay, just now by tomorrow you will get it right. Okay, let me check. This retirement planning. So this is what I updated. We updated today. Okay, now this is okay. Yeah, this is working, right? Okay, this is the new video. This is the new video. We didn't touch this, but I don't know what happened. Mutual funds. It's not coming here. Yeah, I can see that. Okay, I'll check it. Okay, thank you, Gurujit. Okay, I'll check it. Okay, I'll check it. I'll see what is happening. Why it is like, I'll see my back end and also ask that, this front end also I'll get checked immediately. Okay, by tomorrow morning it will be fine. Absolutely fine. Okay. Let me note it down in my diary so that I do not forget. Okay, I've noted it down. Okay. LIC money policies. Okay. First, as I said, first I will go through all the questions. I will take your questions. First, let me go through all these questions that you guys have already posted while going through the videos, right? So first I'll take these questions. Then after that, I'll come and I'll take your questions directly. Okay. So now, January 12th, today is January 12th, January 13. Vaibhav, I think 50% of the questions are from Vaibhav. Vaibhav, are you there? So now what you'll have to do when I'll call your name, or if you want to ask any question, so you can see that there is a reaction button. Can you see that below? Below there is a reaction button, and if you click that reaction button, they will see one raise hand will come up. Once you click that raise hand button, then you will come at the top. Okay. Now Vaibhav has come at the top. Yeah, Mr. Vaibhav, okay, you can unmute yourself. You can unmute yourself. And yeah, just a moment. Okay, just let me take this. Yeah, I am taking you in. Yeah, Vaibhav. Okay, just a moment. Okay, let me read your question. Oh, long question. 3F doubt, mention session number posters. I future doubt from retirement perspective, or any kind of withdrawal after, let's say, 10 years, goal based, or after 30 years for retirement. Okay. When we actually retire, let's say age 50, 60, do we have to withdraw that entire corpus and keep it in bank? Not necessary. Okay, not necessary. Okay, he's asking. Okay, I'm reading it again because it's a very beautiful question. He's asking. Very practical question. A future perspective. Okay. Question: when we actually retire, let's say at the age of 50, 60, do we have to withdraw the entire corpus and keep it in bank? Not necessary. It depends entirely on you. Okay, you might be keep it invested in equities also if you think like you are young enough. And nowadays you see unlike earlier days, nowadays at 60 people will remain quite young. In fact, you can a lot of people starts their second career. Okay, second innings, and it's literally second innings. Okay, so so it's up to you. If you think no, you are not very active, so I need a safe place, so you can get them all and put it some safe place, banks like that, or otherwise it will remain invested. That's why I say give your what is the expected return right after retirement. Okay, that's why I say, because if you have to keep in a bank, so you're getting a 5%, 6%, right? So that's why I ask you what is the expected return after your retirement. Okay, so that's the reason. Okay, so this is one question I have answered, or we should withdraw as per our so now what happened? Now what we'll have to do? So now this is called systematic withdrawal. Okay. I forgot to use this term in my video also. I forgot. Okay. This is called systematic withdrawal. Systematic withdrawal, whatever is your corpus, right? So whatever is your corpus. So entire 2 crores rupees is there, some in shares, some in banks or whatever. Okay. So now from there you will have to, whatever is performing badly or whatever is not performing badly, whatever you think like, at that point of time you should withdraw. So start withdrawing, and you know how much to withdraw. Okay. So you have all the calculations, so you know how much to withdraw. Okay? So every year, every month you can withdraw that, and this corpus will be slowly. It will give you. It will be continuously. It will be giving you return at the same time. It will be coming down also. Right? Okay. So ultimately, like EMIs, once the tenure is finished, okay. So at that point of time, it will be somewhere around near zero. Okay. So, so by that time. Got it? Yes, got it? So this is like that. Yeah. How does taxation plays role? Okay, so now taxation. This is taxation. You have done the workshop, right? Have you done the workshop? No, 8 hours workshop. Okay, you have not done the workshop. Okay, fine. Taxation again. Like I am going to add one video on taxation because now taxation has become an issue. Like you see, taxation is actually what is, if you are investing in equities, what is the tax rate? You know that? What is the tax rate? No, it's 10%. 10% on return. Right? So what we do in the while we're doing the workshop, then you will understand it. What we do, of course, there also, if you look at the last video, in that last video also I have described it. So we say tax adjusted return. What is tax adjusted return? Very simple. So we are going to get 12%. Okay? If we are going to get 12% return, we'll have to give 10%. If we are investing in equity, we'll have to pay tax 10% on 12%. Okay. 10% of 12%, how much percentage gone? 1.2. 1.2%. Okay, let me tell you. Okay, we can calculate it out. Right, right now I can calculate out, but it's not necessary. I have calculated it many times. Okay. Because what happened now, we are taking it as a compounding. Every 12% means assumption is that every year on an average it will be giving 12%, right? But tax people, what they do not calculate it that way. They will calculate it how much you are investing and how much you are getting. Okay. So actual, if you find out the actual percentage, that is less than 1% in fact. Right? Not even 1.2%, it's less than that. Even that, you can safely, if you're really investing for 5 years or more or 10 years or so, you can consider around 1%. So suppose if you are getting 12%, so while in the goal setting, okay, in the last video I have said that, and again in the workshop we'll discuss this. What we'll do, suppose we have got a mutual fund for a particular purpose, so this is expected to give you say whatever 12% or 8%, 9%, depending on the risk that you are taking and depending on the goal. Okay? We should not take unnecessary risk, right? If we need, suppose in 8% return, we are not going to take something which is giving 20% return, because 20% return can give negative return also. We will try to find out as safe an investment which is exactly going to give us 8% return. Okay. So now what happened, from the 8% return or 9% return, we will deduct 1%. Just a moment. Just let me message now. Sure. Okay, sorry. Okay. So now what happens? So we will, while targeting, we will consider 1% less. Got it? So this, like, if the mutual fund is giving say 10%, we will consider 9% only, and accordingly, considering 9%, we will target it. So automatically this 1%, it will give 10%, 1% will go off as tax, because tax they will take only at the time of your withdrawal, not before that. Okay, got it? So this is for equity. For debt, if you are investing for more than 3 years, and that's what we do, right? We do not do speculation, we do not do gambling. Okay. So normally, sometimes we need to do for adjustments, we need to withdraw. If in case we withdraw, then if there's a capital gain, then on that gain, we'll have to pay 30% on that gain. Okay. Otherwise, if we are really investing for longer period of time. So that's why planning is necessary, okay? Such that we don't have to keep on churning it frequently. So in that case, the tax rate is 20% as of now. You see, these things keep on changing. Okay, whatever comes to the minister's mind, she will come one day morning and she will say something. Okay? So that's very difficult. That's why it is very difficult. I hate this subject. Let me tell you. Okay, because there is no certainty. Today you are doing some calculations. Tomorrow she will come, and everything will change. Okay. So now 20% is the taxation on debt. Debt or debt mutual fund, equity or equity mutual fund. Treatment is same, okay? So 20%, but it is indexed. So what is indexation? Indexation, you can just assume roughly, indexation means whatever is the inflation percentage, that inflation percentage will be deducted. Got it? So that means you can safely reduce 5%. So actually your tax rate will be somewhere around 15% also. Okay. So now 15% on return. Okay. If you are expecting 8% return, so around 15% on 8%. Okay. So how much it will be? Whatever. It will be somewhere 1.some percent. Okay. Less than 2%. So only 1-2% is the actually it happens. Another thing is that it is so much in our head, almost everywhere. Okay. You didn't consider tax. Who didn't consider tax? Doesn't matter much when you are investing. When you are not gambling, okay? If you are gambling, 30% on profit. That's too on the profit, right? Got it?
Yeah. Withdraw. It will be auto deducted, or we have to go and notify in our filings or somewhere like.
You'll have to notify. Nowadays, everything is black and white because your PAN card is there everywhere. Mutual fund everywhere. Okay.
So while withdrawing, it won't be deducted.
No.
We have to.
While withdrawing, you'll have to give the declaration. Your CA will do that for you.
Okay.
Okay.
Okay. Yes.
Okay. Okay. So now next question is, you have asked so many questions. I'll be here. Okay. Next question is yours. It is a mutual fund similar to dividend paying stocks, or sir, is there any mutual fund similar to dividend paying stocks or equivalent? There was a popular YouTube case study done. Okay, of course I haven't seen that case study. Can you just similarly, are there any mutual fund which will keep giving earnings similar to dividend, and still there is no need to withdraw any units, and it will keep on growing, and we can fulfill our expenses by earnings from the dividend paid by mutual fund? Okay, beautiful question. Now you see, let me tell you. It's a good question. Okay, beautiful question. Now you see, dividend, there are, you will understand, of course, the mutual fund video is not working properly. Okay? So that means it is giving me indication that I need to update it. Anyway, in the workshop, you will understand it better. Okay. You see, there are income funds. Okay, so these income funds are basically, their intention is to give dividend. Okay. But let me tell you one thing. You cannot expect a very huge percentage dividend. Right? Until and unless your corpus is huge. Yeah. So those who are very rich, for them you're so many percentage of it's a huge corpus. Out of that, even if you are getting 2%, 3%, it's a dividend percentage of 2%, 3%. In fact, that is also a good dividend. Okay. So you can imagine how much money you'll have to keep to get 2%, 3%, and with that 2%, 3% per year. Okay. So you'll have to remain you should be able to run yourself. Okay. So now that's why that planning we do not do. Okay. So what planning we do for our retirement purposes? We do SWP action, systematic withdrawal plan, but stepped up. Okay. So this entire calculator you have got, in this calculator everything is being built up. It is stepped up SWP, not simple SWP, because with simple SWP you cannot survive. A lot of people commit this mistake. They just find out, okay, I will be needing this much of money every month. Okay, if I have this many crores of rupees, that's okay. It's not okay, because every year you'll have to increase your withdrawal. Okay, so it is stepped up SWP, systematic withdrawal. That helps. Only from the income, yeah, that is good, but still, that is not going to solve much this income. It is not giving you actually income. Okay, it cannot until and unless you have a huge corpus. Then it's a different story. Understood?
Yes.
Okay. So this case study, can you just explain this case study?
So in that they have that was hypothetically done. They consider that if someone invested 10,000, bought shares of rupees 10,000 for Wipro in the year 1999, and in 2022 2020 the quantity would have been somewhere around lakhs. I don't know exact figure. And Wipro in all these years, it has given stock, it has done stock splits, and it has also given dividends. So by that, the quantity of rupees 10,000 shares has increased a lot, and every year they are getting dividend also. So even if the quantity is 1 lakh, and if Wipro is declaring dividend of 3 rupees, 4 rupees, 10 rupees on that entire quantity, they will simply get that much amount, like 3-4 lakhs, just by staying invested.
True, that is true. That is true, because that you see this. Sometimes what I mean, so many things. Sometimes you see ignorance is bliss. Sometimes, right? Okay, not always, because a lot of people, they bought stocks, and so what happened? We analysts, we are super smart. What super smart? 20% we have got. Oh my God, 20%, get rid of it. Invest somewhere else. Right? Okay. so of course, we do this before selling. Also, we do a lot of research. Only after doing the research and all. But there are some people without understanding and then somehow invested in Wipro somewhere and become millionaire. Okay, so for that, that is a luck factor. Okay,
yes.
So now you see the luck factor works, but systematically, with knowledge, getting such kind of stocks consistent basis is difficult. Okay? That's why, Rakesh Jhunjhunwala is Rakesh Jhunjhunwala, because he can do that. But let me tell you, Rakesh Jhunjhunwala, it's kind of study he does for one stock, right? So because one of my colleague, fortunately or unfortunately, he or she was loved by Rakesh Jhunjhunwala as an analyst, right? Even at 12 also, he used to call up. Hey boss, what are you doing? Arey ye bolo yaar, kya chal raha hai? So he does lot of research. Okay, a lot of research. That's right. And now what happens once you are there, and slowly, what happens? The companies also come to know. So a lot of companies, lot of brokers, lot of analysts keep visiting him, because they know if Rakesh Jhunjhunwala buys, or there are some, Mr. Damani is there, these big guys. If they buy, then everybody will start looking at the company. Okay? So Bill Care, etc., they came out with innovative ideas, right? So at that point of time, people were thinking about, talking about Bill Care, Rakesh Jhunjhunwala bought it, Bill Care has become. But the technology is very innovative, right? They are into that pharma packaging, right? Okay. So pharma packaging, earlier than that, pharma packaging was not that sophisticated. Now they have come out for different pharma ingredients, different packaging, different materials are used. Okay, that's very useful. Okay, got it? So that way. So but for that, you need to have research. But what you said, that Wipro, this is correct. And but the thing is that you cannot guarantee that you will continuously will be getting such kind of stocks. Okay, so that's why we need to go with the calculations.
Yeah, the another perspective for this question was, let's say this generation, the one who is investing, he won't be there anymore. But like our grandfathers or their grandfathers, if they are planting some trees, those fruits are enjoyed by the next generation. This is how the various rich families have become rich, because someone at their time planted. So for the dividend fund, what I thought, even if it is stayed invested for 60 years, 80 years, now my next generation will continue on investing that, let's say 500, if I'm starting with 1,000 rupees monthly, and that is simply, I need to forget that. With that intention, even if I'm starting something today, after 60-80 years, if that is giving dividend, the corpus would grow to the amount which you are saying that it should be huge, and then the dividend can,
it can grow big. Yeah, that's true. That is true. That's very much true. That what you are saying actually absolutely right. Okay. So there are again another aspect. Since you have asked this question, so we are going deeper and deeper. Okay. In the stock market, you see. Let me tell you one thing. That if you are really going to invest for your grandson. Okay, that should be the correct approach. So in that case, let me tell you, and if you are yeah, mutual funds is something which is dynamic. Dynamic means what? You cannot say like, okay, I love this company, this guy, that's why. Because this fund manager, it depends on what fund manager loves. And fund managers, they are basically, they continuously, they keep looking for alphas and instant alphas. Okay, they are not going to save your money, invest your money for your grandsons. Because the market is like, you are one in millions. Right? Market needs, or majority needs quick return, quick money. Okay, so they are always obsessed with quick alpha. Okay, immediately alpha chahiye, immediately alpha. So now they see like, this Wipro is there. Okay, it's a big giant. It's a like, it's a dinosaur moving big, or you can say elephant, like, moving ahead. Okay, so they will be, what they will do, they will sell off this thing and they will buy something which is going to give you quick alpha. Are you getting it? Yes. So that's why with mutual funds, such strategy is difficult. But if you do some research yourself, in index fund also, not all. Now you see the basic criteria, the first criteria of investing for your next generation is, it is that person, that individual. That is the most important thing. If the individual is good, first thing is that it should be trustworthy. Okay, he must be an honest, good guy. Okay. So then you can trust on him. And if somebody is not good, basically, he is not, he doesn't think about the outside, his customer, society, right? If that attitude is not there, he can never become big in business. Okay. So to become successful, to become big in business, okay, medium, okay, fine. 10 crores, 50 crores, 100 crores, 200 crores is fine. But if you want to make beyond billions, then he must be trustworthy. That is the first criteria. Otherwise, the universe will not come to work for him. All right. So this is the okay. Somebody is cunning. He can make it till he can manage himself. Okay. So how one person, like he can manage up to 100 to 100 crores, right? Beyond that, he cannot. Right? So he needs a lot of people, good people, and good people will not work for him. But if he is not good, so that's why it is. You see, all the big companies. Look at their that main guy, main promoter, he is trustworthy. Wipro, Ajim Premji. So there are, you can see like Infosys. So they have different kind of philosophy. They think different. They are big. They are big. Right? They themselves are big. Since they are big, their thinking is big, their attitude is big, they can create big organizations. So this is the thing. So for if you want to plan tree for your next generation, then I should say it's individual stocks, good stocks managed by good, honest person is better. Okay. But for that you need to have skills. You need to have skills. So then Sucheta Goyal is there, but before that, again, you have two more questions. I can see. Okay, two more questions. While comparing this monthly requirement, 50,000 in this example, what all factors we need to consider, since today's need will be different from 23. Okay, so now you are asking about your monthly requirement. Okay, yeah. So you are asking about your monthly requirement, how to calculate monthly requirement, because today your needs are different, tomorrow your need will be different. Yes. Because while doing the calculations for your retirement. Okay, beautiful question, awesome question. You see, everybody, I have updated the retirement station today. New videos I have given. Also, I have given a booklet, because we are approaching that. We are preparing booklet already. We have prepared a booklet for mutual funds. Okay. This training also is a small booklet, 5-6 pages booklet. Okay, mutual funds also. Mutual fund booklet is not uploaded as yet. Okay, but this booklet is there and new video is there. So please go and watch that new video and download the booklets. In that booklets, I have discussed a little bit. Now you see what you are saying, that is true. But one thing always remember, your requirement will be less than what you need today every month.
Okay.
Okay. First thing is that you will be like, today you need money not only for your survival, but also for your future. Okay. So what future? After retirement, right? When you stop working. At that point of time, you are not going to earn. You are going to enjoy whatever you have saved, right? So at that point of time, only you withdraw that much of money that is needed. So you do this analysis, how much money you need actually for your bare living.
Okay.
It is very less. Let me tell you. In fact, we have realized it when I had that bad phase, right? So that's number one. And second, when the corona happened, we had nowhere to go, nothing to do, right? In the home, right? So actually, it's very less. First thing. Few school fees, etc., right? School fees and like lot of such. Okay, clothing, okay, fooding also. All those expenses will come down. Your restaurant, like that is I'm saying, non-discretionary expenses. In case of discretionary expenses, will come down drastically. Going out, restaurant, outing, all these things will come down drastically. Okay. So what will add? Some medicine expenses.
Yes.
That will add, and regular doctor visit, 200-500 bucks, right? That will be added. Okay. But again, for major ailment, you must have Mediclaim. Nowadays, Mediclaims are available for senior citizens. You must have Mediclaim. Okay. That is must. Otherwise, like you can go, anybody can go broke, right? So your entire corpus and everything will go haywire if you're not insured. Okay. So all these things will be added, and all the expenses like your clothing expenses will come down drastically, your school fees, etc., come down drastically. So you can have an idea. You can have an idea, and since it is a dynamic process, right? It's actually a missile. You know how the missile goes, like a missile, like when you say like what is called the thermosensitive missile. Thermosensitive missile, when you leave a missile, like this target is moving here and there, and you just leave a missile. So missile is actually he's doing like this. So he actually goes like this missile. Okay, the target is moving. He is also moving like this, like this. He doesn't go straight. He gets slightly ahead, and he knows like I am going outside. Okay, then he will come inside. Again, he knows the missile knows that it is going outside. Again, it will try to come outside. So actually, like missile moves like this, but he will always follow the target. But it's not he is following the target like this. He's always course correction. That is a course correction. Okay, so we do course correction in our financial field. Okay. Today you don't worry. As you are going, like slowly you are going towards 60, right? It will be more and more visible, and we will be updating it. Got it? So don't have to worry. But the thing is that if you go like this, then you do not know where you will reach. Okay. So it is like missile. Got it? Did I answer your question?
Yes, sir. Yes.
Question? Okay, fine. So I think you have got one more question. Okay. So many questions you have asked. Okay. So hello, sir. By how much inflation rate grows now? We are considering inflation of 6%. What was this historically? If it was less in past, then there are chances that will grow in future as well. Okay, beautiful question. Today we are calculating at 6. So do we need to set up this inflation rate percentage growth? Okay, got it. Okay, so for what is the inflation? Okay. Now you see, let me tell you one thing. Yeah, we are getting like 6%, 10%. Okay, but you see one thing. You see, look at the developed countries. Inflation rate is very low. So their inflation rate is very low. So the same thing is going to happen with us also. Okay. As we become more and more developed, our inflation is going to come down, and our interest rate is also going to come down. Okay, got it? Fortunately or unfortunately, okay, because both goes hand in hand, right? So you say like you can borrow at such a small rate, right? To borrow in Japan, US, etc. Okay, so that's what's going to happen. Right? So long term, I think 5% is fine, and since we are doing course correction, okay. So let me tell you, okay, I will not be surprised even if it goes down further. So it depends how much developed we become. So when we become very developed, like all are rich, right? Developed countries, okay. So then inflation will come down. Okay. So now, since we are developing country, our inflation is slightly higher. And you can see earlier we had 13% interest rate. Yes, probably like when we were young, 14%, 14% interest rate, 15% interest rate. So nowadays, this is unheard of. 13% we cannot even the entire economy will go bankrupt today if you have to go back to 13% interest rate. Right? So that's why. So going ahead, we strongly believe that reduce. We'll have to in between, it will go like this, right? It's like beside only, right? But it will be ultimately your average will be going down and down. Understood?
Yes.
What the answer?
Yes, sir.
Okay. Anything else?
No, sir. All
No?
questions sorted. Thank you for all the knowledge.
Okay. So now next is Suchita. Suchita Goyal, ma'am, are you there? Suchita Goyal, are you there? Suchita Goyal, are you there? What you can do, you can just click that reaction button somewhere there. Click that reaction button and then raise hand. Suchita Goyal. There is a reaction button. You can just click the reaction button and then after that you will see there's a raise hand button. Click that. Suchita Goyal, I think an answer is not there. Okay, fine. Suchita Goyal is not there. Aditya Singh, are you there? Aditya Singh, are you there? Aditya Singh. Aditya Singh, are you there? Yeah, Aditya Singh. Yeah, I can see. Yeah. Can you switch on your mic? Yeah. Hello. Can you switch on your video such that we can see you? Aditya Singh, oh my God, it's quite young, yeah.
Good evening, sir.
Good evening. So, just a moment. Let me take you in. Okay, still out of college or out of college?
Yes, sir.
Okay, good. I'm really that's awesome thing, right? Just a moment. Okay. I think yeah. Yeah, Aditya Singh. That's it. People should join early. Then only you can really make a lot of money. Yeah. Tell me.
So,
Okay, let me. Should I read it out?
Sure.
Okay. I am planning to invest in equity mutual fund for 15 years through SIP. Do I still need to worry about market P ratio and regularly shift money from equity to debt or index fund, or I can keep investing considering the benefits of rupee cost averaging? Now you see, rupee cost averaging has been sold, marketed very well by people like me, right? Because I was there, right? Okay, but the fact is that so if it is like that, okay, let me tell you. So this rupee cost averaging and then this value averaging, all these stuffs are good, but understand one thing. Okay? Understand one thing. When you are investing, suppose you are investing 100 rupees or whatever, right? So when the market is very high at the peak, you are investing 100 rupees. Okay, you are investing 100 rupees, and the market comes down by still you are investing 100 rupees. Okay? So this rupee cost averaging and all this stuff, they are saying that, okay, so when the market comes down, you buy more share.
Right.
Okay? You buy more share, and then after that, it goes up, and your everything goes up. Okay. But let me tell you one thing. It is not necessary how much shares you are buying. It is basically you are investing 100 rupees here also, here also. Got it? Nobody is going to give you a additional rupee. Nowhere. Okay. You see, even if you buy that entire Reliance, when it comes down by 20%, you are losing 20%. Okay. Entire Reliance, if you buy, then also it is 20% down or 30% down, whatever. And when it's up, it's up. Okay. So this concept that is being sold, if you do the crunch the numbers actually, even for a couple of years, you will see all this concept is it's good for selling products, right? But ultimately, what you are doing, you just remember whatever is happening, you are investing 100 rupees here. It comes down, your 100 rupees loses money. It becomes 80 rupees or whatever, 70 rupees. You put another 100 rupees, then 170 rupees, and it goes up. Got it? Ultimately, it goes up. This 170 rupees goes up. Nobody is giving anything additional. Okay, but it is being marketed in such a way because you do the exercise yourself. Just do a dummy exercise yourself. You will come to know. Ultimately, how much is the performance? You are not going to get anything else. Okay, this is the first thing. Okay, so this is the first thing. So when it goes down, your money value is going to go down. Remember this. Okay, when it goes up, your money value is going to go up. You are not getting anything extra. This as part of market, your money value is going up or down. First thing. Okay. Second thing is that now people can do SIP, they can continue with SIP, right? Whatever is the market. So two types of persons can do that. First type of person is they do not have any knowledge, they do not know anything. Okay. And you see, classical personal finance, they always advocate doing simple SIP. Because the assumption is that we do not have knowledge about market cycle. It's called market cycle, right? So we try to catch market cycle. General people do not have knowledge about market cycle, so continuous SIP. That's good because these guys, they do not have any option because they do not know. Got it? When to get out, when to get in, they do not know. This is the first one. Second option is lot of people, some of my friends, they have the knowledge, but they don't want to, they have some other interest. Okay, so they don't want to break their heads looking it like coming down and going up and changing and shifting. They don't want to do that. They have knowledge, but they don't want to do that. Okay, so they can continue with one SIP. They just take a good mutual fund, they think it's good, and they will continue. Okay, but let me tell you one thing: if you want to have super normal return, then you must be an active investor. Okay, this is the cost you have to pay. Being active in the market, having knowledge. Right? You have paid here, and that's why you are here, right? I have spent money, right? So that's the cost. So being active, and again, you are being active, putting the knowledge, doing the balancing the portfolio. Okay, that you can do. You can earn super normal return. If you do not do that, you will get average return. Our choice is yours. Understood? It's your choice. Now let me tell you one more thing. Another tips I'm giving you from my research only. It's very important when you start your investment, like entire return. Okay, I have done my entire life. I have done hundreds of research on returns only. Okay, different kind of returns. Like a lot of my analysis reports were in the newspapers also at that point of time when I was an analyst. Okay. So now what I have seen, if you start your investment in a major chunk of your money at the beginning only, if you start at the lower, okay, after that you don't have to worry. But if your entry or beginning of your investment period, you make the investment at the higher price, right? So then it becomes very difficult later. If you are continuously doing SIP, it becomes very difficult, extremely difficult to get a good return above normal return. Okay, above normal return is 12% I'm talking about. Okay, that's all. 20 years SIP on index, it gives 19 years SIP on index, it gives around 12% return, 10% return, not 12%. Okay, so this data are there a couple of weeks back in this forum only we discussed them. Right? So now it is up to you. Also, so you have the knowledge. You haven't done a workshop, right?
No, sir. I haven't.
No, right? Yeah. Do the workshop. Then after that workshop, you decide. Now you have the knowledge. So that's after having the knowledge, if you want to say, okay, fine. Other people, they don't want to bother, right? So let it go. Whatever happens. That is up to you.
Sir, I'm having one more question.
Please go ahead.
Please. A few years ago, I have invested in HDFC Tax Saver regular plan code. It was through the third party. So when I check the return of regular plan growth and this direct plan growth, there's a huge difference. That
same mutual fund.
Same mutual fund, right, sir?
Okay.
So now should I switch to direct plan growth or should keep investing in this regular plan growth?
Okay, you say are you getting any benefit because you are going through regular?
So like there is around 13% return XIRR.
No, what I'm saying, like, as regular means what? Regular means there is one broker involved in between.
Right, sir.
Okay. So are you getting some advice or some benefits or some service from that guy?
No.
No, then why you are paying that?
But now if I want to shift to direct plan growth, the NAV, there's a difference in between NAV values. The direct plan.
Yeah. Because that will continue like this. Because when you started, like, then after that, what happened? 1% or 2% or 1 point some percent, right? Every year that 1 point some percent is difference. So you can say it compounds, right? Every year 1 point some percent is difference. Ultimately, when the time goes, like, it becomes this different. When they started, it is not, difference was not much, right? So as it goes, like, the difference increases. It will continuously increase.
So if I switch today, then there will be around 17,000 rupees deficit. I lost around 17,000 rupees if I switch complete my share to direct plan growth.
Means already you have lost, right?
Right, sir.
Only because now it will be in book.
Yes.
Okay, so you have already lost it.
Right.
Got it. So if you are not getting, you see, like, I also buy through regular fund. Why I buy regular fund? Because I get some advices, like, I just, like, I am a lazy person. I have other things to do, right? So what I do, like, I just give a call, like, I choose that fund and I just give a call, and that gentleman, he does everything for me. Something happens, he comes, he collect the checks, or he send me the links and all. Sometimes he gives advice also, some small advice also. So for me, this is okay. But if you are not getting any service, then there is no point giving giving brokerage to somebody. Regular plan means you are giving brokerage to somebody.
I can do one more thing, sir. Like I can pause my current SIP and start new SIP in direct plan growth.
Yeah, that I can do. Then you can shift also. No? You can just sell it off, because since they are both for the same mutual fund, same portfolios are same, right?
Same, sir.
Same portfolio. So like you can switch off. Better you can switch off. At least you are getting that 1% or whatever additional percentage. From next time onwards, you will start getting. Because you see, like, if they are the same fund, one is direct, one is regular, right? You never think that one day your direct regular plan will overtake direct. This is never going to happen. क्योंकि जब खरीदते हैं ना, when they buy the shares, they buy shares for both the funds, same shares. Okay, so like they are buying Reliance fund. Okay, Reliance, this is for regular, this is for direct. Okay, SBI, this is for regular, this is for direct. They are not going to do, because otherwise it will not be the same fund. Okay, so this portfolio should always remain same. So you never think that, like, one will, like, regular fund will someday overtake direct fund. This is never going to happen. Then they will have to change the name of the funds. All right, so they will have to say this is this fund, this is that fund. Okay, it cannot be the same fund. Understood?
Sir.
So no point. No point continuing. If you really want to switch to better return, then there is no point continuing. Got?
Okay. Thank you, sir, for sharing the knowledge.
Yep. How old you are? Can I ask you?
Yes, sir. It's 25. I have completed my MTech, and after doing my graduation BTech, I joined as central government services.
Okay, awesome.
Then I did my MTech after that.
Okay, beautiful, awesome. Right. So you have done your retirement planning?
So I'm planning, sir. I'm doing.
Planning.
Yes, sir.
Yeah. So I think you are 25. So might be like how much retirement money you need?
Sir, when I work, it was around
today's price.
6 to 7 crore
price.
Something. Today's
6 to 7 crores. Today's price per month, how much?
Per month around 50,000.
50,000, right? I think if you start keeping aside 3,000 or 4,000 rupees, that's my hunch. Okay, I know them. 25 years, right? So you'll be able to get that.
Sure.
Got it?
Okay, sir.
Because Lakshmi will be with you, because since you have started young.
Thank you, sir.
Congratulations. Right? You can easily go for 1 lakh. 1 lakh equivalent retirement. That will be awesome, right? Yep. Do that planning, okay? And do not miss that workshop, okay?
Sure.
So it's very important, like that person like you at such a young age, you have done this course. God bless you. Okay, we'll
Thank
do
you.
really well.
Thank you very much, sir.
Okay, don't commit mistake.
Sure.
Don't be greedy. Okay.
Okay.
Chal, bye. See ya.
Bye, sir.
Yeah, Dr. Vinayak. Dr. Vinayak, can you just unmute yourself? Dr. Vinayak.
Yes, sir.
Yes, sir. Just a moment. Can you switch on your camera? Possible?
Camera.
Yeah, such that I know I can take you in. Sucheta girl, if you are there, Sucheta girl, you can raise your hand. Next, I can take you in. You ask question. Okay, just a moment. Yes, sir. Tell me, sir.
Yes, sir. Today I met one LIC guy.
Hmm.
I mean, he visited my house and he was explaining about 936 LIC plan.
Mhm.
So what he explained me was for 15 years I have to invest because since my age is 47 now.
Hmm.
So he said I have to invest some 12,533 per month for 1 year.
Hmm.
And post 1 year, the second year is onward rather, I should invest 1,263. So total investment of 21,66,173, and return he says with a period of 6 years in between after 15 years. So if I invest now after 21 years, I will get 42,75,000. So that is future value, and that could be received in installments, 10% installment. So 4,27,500 each year. So which amounts to some 35,000 something I calculated per month. I can receive that in a per month, or I can take it annually.
Okay.
But
Okay.
I was convinced. What he says is the return is 8%, and if I stay loyal, so it will be minimum 3% to 6% of bonus.
Okay. Did you do the calculation? So did you ask him what is the IRR or XIRR or whatever?
Yeah, I tried to tease him on that, but he was smart enough to escape that question.
He was not. He was not. Okay. He was not answering.
He was smart enough to escape my question.
So did you do this IRR? Did you do this calculation?
No, sir, I didn't get the time because
Okay, you didn't get the
I finished
time.
this work, and then
Okay.
I had to attend your.
Okay.
Q&A.
Okay. 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 So can I do that? Total how many months will be there? Total how many months will be there?
15 years. So
15 years.
It will be, yeah, 15 years.
Okay.
So it will be 180 months. Sir.
180 months. Okay.
180
Okay. 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 Let us do this.
Yes, sir.
Okay. So I'm just
I suppose
opening
there is
Excel.
some other person, even he wants to understand Jivan Labh. So this name is Jivan Labh. There's another person who has a similar question.
Okay. Okay. Jivan Labh. Okay. So here we are analyzing
Yes.
Jivan Labh. Okay.
Yes, sir.
Okay. Just a moment. Okay. I'm just opening it. Ashish Kumar Pal, date of workshop is date of workshop is 24 and 25 Feb. So earlier we used to do at the beginning of the month, but now because we have some issues with that, so we have shifted it towards the end of the month. So 24 and 25th of Feb, we are doing the workshop. Okay, just a moment. Okay, so here Jivan Labh, right? Jivan
Yes.
Labh. G1 LOV Labh. That's how you write.
LABH.
LABH Labh. Okay. LABH. Okay. Jivan Labh. Jivan Labh. Okay, fine. Okay, so now here we have the periods.
So if you allow, I can share my screen. So I have taken a photograph of what he has calculated.
Okay.
Please
Yeah.
allow me to share the screen. I can.
Okay, so have you done the calculation? So it's better if you do the calculation.
No, sir. No, sir. No, sir. I have not done the calculation. Whatever he has done, I have taken a snapshot of it.
Hmm.
And
Okay, but like, if you show the screen, shall I be able to walk? I think I will not, right? I don't know. Like, I am not that tax
no,
savvy.
no. Correct. Yeah, correct. You won't be able to work on that.
Yeah, I will not be able to walk, right?
Fine. I'll participate with you. Don't
Yeah,
worry.
yeah. I think that is better. Okay.
Yes,
Okay. So he is saying, like, now here we have the periods. Okay.
yes, sir.
Age factor will come in. Should I keep a column of age or not necessary?
Yes, sir. Yes, sir.
Yeah,
Age
okay.
factor will come in.
Okay. So here is a period. Period in month, right?
Yes, period in month.
Period in months, and then here we have the age I am writing. Okay. And here we are writing like a cash flow. So it's starting with 0
till 180.
till 180, right?
Yes, sir.
I think this will not work here. Okay, chalo. Yeah, now we should go for just a moment. Let me open. I think this one is better. Google Sheet is much better. I think. Just a moment. So I'm opening a Google Sheet. Mommy, 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 mommy. Pani diasun. Just it off question. Pani dia. On question deh. Let's go slow.
Hold it that way. Yeah, it will go till 180.
Yeah. 180 you said, right?
Yes, 180. That's it.
Okay. So now what will come here? Now age, right?
Yes, sir.
So what is the age?
47 now.
47. Okay. So now this will be your 47 plus
0.1.
1 divided by 12, right?
Yes.
Yeah, 1 divided by 12. Okay. So 47.0.
So, so just double click it. Double click it. You don't have to pull it.
Is it?
Double click it will go till end.
Oh,
Yeah.
thank you. Okay. Okay. So this also, okay.
Correct.
Now is the cash flow. Yeah. Now tell me the cash flow. So first you'll have to pay, of course.
Yes.
Yeah.
For first year it will be 12,533.
Every month.
Yes, every month.
12,533.
33 for first 12 months.
First 12 months. Okay.
Correct. Then after that, it will be 12 to 63.
12 to
63.
63. For
Continuous. Double click it. It will go
Okay.
till it.
Okay. So now we have 180. Okay. So till 180. So this is the cash outflows basically.
Outflow. Yes.
Okay.
So
Oh my God. We must have given minus, right? Okay, just a moment.
Correct. So you can select the whole thing. You can select the whole thing. I will tell you how to use it.
How to give minus
the
for
whole thing.
everybody? Okay, just a
Yes.
moment. Yeah.
Yeah. Now go to click on left click on right click on that.
Yeah.
Format cell.
Format only. I have got format only.
Okay. Format only.
Okay.
Click that.
Oh, nothing happened.
Achha, nothing happens.
Nothing happened.
Okay.
Case values only. Okay, I think okay,
Fine. Just besides that column.
Ah.
Beside that column. No, sir. In column D. Come into column D. Is equal to minus and that column C. Just yes. Enter.
Then double click.
Yes.
Okay, so this is the cash
flows.
flows. Okay. Okay. Just a moment.
You can paste it.
Yeah, paste values
only. So you don't have to keep C. Yeah, correct.
So no confusion. Okay. Okay. So now these are the cash outflows. Now tell me where is the return coming?
Correct.
Yeah, where is the return coming
So,
now?
okay,
At the
return
end.
is coming after 180 months of payment.
Okay.
We have to wait for 6 years. Waiting period is 6 years.
For 6 years. 6 years means for another
72.
Another 72, right?
Yes.
72 months. So
Yes.
180 plus 72, how much it will be?
183 plus 72, it will be 253. 52.
252, right?
But that's it.
Yeah. And
okay.
So here age will be also like accordingly, right?
Correct.
Yes.
So now I'm 47. So my age will be 47
62.
plus 21. That should be 68. So we are reaching at the age of 68.
Yeah, 68. Yes, exactly. Yeah.
So this day I will get my returns will be 42,75,000.
42,75,000. Okay.
Yes. because he worked on that calculator that my future value will be 72,500. Sorry, 42,75,000.
Okay. So anything else you are going to get?
Yes, and from here onwards,
Hmm.
from here onwards, it will be 10% each year that I can get.
10%.
I don't have. Yes, I can take this amount. Either I can take this amount. So let's calculate on this one, sir. Because
Okay, fine.
anything is after that. So let's understand that 42,75,000 is my future value.
Okay. So how much we are getting, right? So very simple. Okay. I will do on. So this double click will work here.
No, sir, not
No,
yet.
it's not allowed.
You'll have to give double column. Yeah, it will work, sir. Shift, end, press
Shift.
end button, shift, end, and then down arrow key.
Okay, okay, that I know. Yeah.
That's it. So you'll have to skip the last one.
Yeah.
255, 254, yes.
Right. Yeah, that's right, right? 255. 1%.
Sir, 254. Because 255 column is the return.
Yeah, so we need IRR, right? So we'll have to consider everything.
Okay.
We'll have to consider everything, no? So IRR is your 0.39% per month. So is equal to 0.39 into 12. Approximately around 4.6%.
Okay.
4.7%.
So it is as good as whatever I have paid, I'll be getting less return from him.
Yeah, so you'll be getting, yeah, that much, yeah, we'll get back.
Correct.
Yeah, positive means is you are getting it back and some more. Yeah.
Yes.
So better you can keep it in. Okay, now if there is a bonus or something.
Yes, he said there's a bonus of 3 to 6% depending on the performance of the
Company.
Yes, of the
Okay,
company.
yeah. So yeah, that's so you can like another 3%. So now let us assume this is equal to okay, maximum. Let us assume maximum 1.06. Okay, 6%.
Correct.
Okay. So this will be still it's 5%.
5%.
But you will get tax benefit. Yeah.
Sir, no, there's no tax benefit because I'm already invested for ATC.
Like a 480C is gone.
It's full.
So better like put in the FD.
Correct.
Corporate FD.
Correct.
So guys, those who are looking for Jeevan Love. So this is Jeevan Love. This much love we will get. 5.1%. Okay. Got it, sir?
Right, sir. Thank you
Yep.
so much.
Okay.
Sir,
This
mine
is
is done. Yeah,
hello.
mine has taken my question, sir.
Yeah, Dr. Vinayak. Yeah.
Yes, sir.
Yeah, your second question. You have any other question?
No, sir. That's it.
No? Okay. Okay.
Thank you so much.
Okay. 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 Anybody else? Anybody else? Anybody else less than inflation? Yeah, it's less than inflation. Okay, so that's why. Yep. 4 to 5%. Normally, LIC policies are 4 to 5. Yeah, normally it's like that. That's why they skip that. Okay, skip that question. IRR question. They will say, okay, we cannot calculate IRR. Okay, fine. Then give me the XIRR. XIRR is also difficult for this and this. Okay, what is the rate? Compounding CAGR. Okay, you just ask it. They will say like normally they will say normal rate and all this stuff. Yeah, Mr. Ralph. Yeah, please unmute yourself. Yeah, I can hear you. Can I? Okay, just a moment. I'm taking you in, sir. Nice to see you, sir.
Thank you, sir. Thank you, sir.
Yeah.
Happy morning. Happy evening, sir.
Happy evening. Happy evening. Yeah.
Sir, I purchased one SIP on so much we have videos chatting, seeing your videos and everything. But I not saw the NAV is 384, sir. How to that NAV see it is better? I don't know how to calculate NAV or it is say it is a good NAV or bad NAV. I don't know, sir. But P ratio I saw. Another thing I saw market. I compare with other future mutual fund like Aditya with I compare with Nippon and ICICI. I saw this one is the good, but I don't know. I not saw that term NAV 384.
Okay.
And then
Okay, beautiful. Okay. Okay, so this is like okay. So now you see, you have asked a very good question, and you are asking this question because you are yet to attend my workshop. Yes.
yes,
Yeah.
no, I attended, sir.
You have attended
I
it.
attended.
Okay, you have
Yeah.
attended. Are you need to attend once more. You miss that person NAV. We discussed
Yeah,
about
I'm-
NAV, right?
Yeah, I miss. I
Okay.
calculate, but I not consider NAV means I thought it is that 28 and 19 rupees. But when I purchase, see the this one statement, that time I shocked. It is NAV is 384. I saw it is 28 rupees or 22 rupees that time.
Okay, okay. So that you can okay, fine. That you can see, you can check, right? But you see, mainly absolute NAV. Okay,
Okay.
absolute NAV. Okay, how can I? Okay, let me think. How to answer your question, right? Okay, okay. So now you see. Okay, so now. Okay, so now you see, like I am buying. You are buying a potato, right? Same potato. Okay, again coming back to
Yeah.
potato.
Yes,
So you are buying a potato and same potato, Shimla potato, right? What is
Yeah,
Shimla potato and like this famous
Yeah, yeah.
potato? Shimla potato you are buying,
Yes,
and
sir.
I am also buying Shimla potato. Okay.
Yeah.
So I am buying Shimla potato for 100 rupees, and you are buying Shimla potato for 1000 rupees. Okay.
Yeah, exactly. Yes.
Okay. Right. And
Yes, sir.
so now, what do you think? Who will get more return?
You, sir. Who buy the less price?
Shimla potato. You are also buying Shimla
Yeah.
potato. I am also buying Shimla potato. Who will
Yes,
get
yes.
good? Who will get better?
Yeah, yeah. Yes, sir.
Both of us will get the same return. Yes or no?
Yes, sir.
Because yours is also Shimla potato. Only thing is that you bought for 1000 rupees.
Yeah.
Mine is also Shimla potato. I have bought for 100 rupees.
Yes, sir.
Right? If the Shimla potato goes up, in terms
Yeah.
of percentage return, both of us are going to get the same percentage.
Yes, sir.
Okay. So that
Okay.
means whether your NAV is 1000 or whether the NAV is 1, that
Okay.
is not important.
Okay.
Important is how much return it is going to give.
Yes, sir. Exactly.
Understood? So when you are looking for, like suppose if you are buying a, suppose you are buying a mutual fund which is NAV is 1 rupees, okay,
Okay.
but after 1 year it has become 100.
Yeah.
I buy a mutual fund which is 1 lakh NAV, but after 1 year it becomes 1 lakh 1000.
Okay.
Right? 1 lakh
Right.
rupees I can invest like 1 NAV. In your mutual fund also I can invest 1 lakh rupees.
Yeah.
Okay, only thing is that my number of units will be more. So it's like
Yeah, yeah.
same like buying same Shimla potato.
Okay.
You are buying for 1,000 rupees, I am buying for 100 rupees. Doesn't matter.
Okay.
Percentage return will be the same. So now
Oh, got it.
percentage return is important, not that absolute NAV, that is not important.
Yeah, got it, sir. So then how to calculate then percentage returns means the market will go or sorry, this one our amount will be increased.
Okay, so now for that, like as we like what I believe, like you need to attend the workshop again. Okay.
Okay.
So there again, like it will be cleaned up. Okay. In the workshop, we discuss this thing. Now you say first we take a decision based on the total market valuation.
Yeah.
That's why you look at the PE ratio.
Yes,
chart
yes,
also, like,
Yeah,
based
yes.
on that. So once we decide, okay, this is the asset class that we are going to buy. Okay.
Yeah.
Suppose we are going to buy equities.
Yeah, yes,
Equity mutual fund. Okay. Suppose we have decided.
Yeah.
So now
Yeah.
which mutual fund equity say we have decided, looking at the PE gives the sense of risk. Okay. Suppose the risk is not very high or whatever. Okay.
Yeah.
So we have decided that we are going to buy large cap equities. Okay. So
Yeah.
in that, after deciding that large cap equity, so we have decided we are going to buy large cap equities only. After that, we go to where? Do you remember?
Sir,
After
here
deciding,
that
yeah,
that a small triangle square is there
yeah.
where the equity, large cap, and medium cap we take the chart. That one, sir.
Okay, so where it was? It was in we love value research online.
Value research online, sir.
Okay, so when we
Yeah.
decided, okay, we decide, okay, so this is the market. So at this point of time, we must invest in such kind of stocks. Okay, for
Okay.
this particular goal. Okay, general,
Okay.
whatever.
Yeah.
So now once we decide that, after that we go to valueresearchonline.com. You can go to Money
Yeah.
Control also. You can go to
Yeah.
some other places also.
Yes,
In the valueresearchonline.com, what we look at, because we have decided equity large cap. Amongst equity large cap, which one is the best?
okay.
Okay, and like there are criteria. There are 5 stars and different
Yeah.
5 stars. Then we look
Yeah,
at
yeah.
all the 5 stars, and then we
Yeah.
decide.
Yeah. I check here, sir. Till here, I perfectly I checked,
Yeah,
and I saw P ratio also.
Hmm.
From one app, I downloaded app. In that, everything's comparing, sir. India Money app is there. I downloaded. In that, everything is comparing what you're showing. That the detail here, the snapshot means this is the ratio is there. This is the value. This is the large cap, medium cap. They're investing so much ratio. Everything on mobile it is giving, sir. That I feel very comfortable for that one. Value ratio also is there. That is some time consuming. Here, anytime I can without logging, I can doing this
okay,
one.
beautiful. Give me the name of the apps. I will also have a look at it.
IndiaMoney.com.
IndiaMoney.com. Okay.
NID money, sir. NID money.
MID money. MID money.
No, IND money.
Okay, IND money. Okay. Yeah.
Yeah. It is going. It is giving everything in our saving account. How much money is there? How much credit card is there? When to due is there? Everything
Oh.
showing, sir.
Oh,
It is-
that's awesome. Huh?
One single click they showed everything. I shocked first day.
So they
Then
know
I-
all your information, everything.
Everything, sir, which are connected to my PAN card, now, sir. Everything is like
Okay.
giving, particularly money matters, sir.
Okay, so it's a government of India something or a private?
I think it's a private, sir. It is.
Private, but still like they can extract so much of data.
Yeah, easily, sir. Easily they can. It is everything is available, sir. But
Public
one thing
participation, yeah.
one thing is there, sir.
Hmm.
What we have some mindset or some mind hurdles there. I overcome. Even though I want to purchase tomorrow. Last 3 weeks I'm postponing. I told today I have to purchase one thing. It is good or bad. I don't know. First I have to break my this one blockage.
Okay.
Then I will see once. It is only 6,000, but it is not. It is like 6 crore rupees. I winning my mind. Like, today I have to. इसको तो कैसे करना ही है. नहीं कल करेंगे. Like every time day after tomorrow, day after tomorrow, like 15-20 days. One day it's seated. It is nearly a half day. It is over. I think what a time I don't know, but I have to complete this one. Plus or minus I don't know. After we'll see. What will
That's
happen.
good. So now this is the real learning starting for you. Okay.
Yeah,
So
sir.
now
Exactly.
you will really like you will learn everything. Okay.
Yeah, before that, my finger are fearing, means shivering, like, अरे कुछ होगा तो mistake. I think 6,000 तो तेल लगाना है, इसको अंगार लगाना है. I want to fire the 6,000 rupees.
Okay.
So I attended, so I invested my time. What are getting nothing, only getting head up. Means information getting. We are not doing anything. I will do it this time. So I did it, sir.
Okay, good.
Right.
So what I'll suggest, this also 25th Feb we have workshop. Okay.
Yeah.
Please
I
do
noted.
once again. Okay. So
Yeah,
it will be like completely.
Yes,
like,
I noted down, sir.
clarity. Yeah.
Yeah, I
There will
noted
be
down.
clarity. Okay.
Yeah. Thank you, sir. Thank
You're
you.
good and big congratulations that you have like
Yeah.
really broke it. Okay.
Yeah, I really broke it, sir. Really, I have to do 15-20,000 means per month SIP I have to do. Means I thought
Okay.
I thought it is 3,000, 5,000, 2,000 like that. Means different. I will go with that.
Beautiful.
Before I have to
Beautiful.
take one shot. So in that I will get all clarity where I done mistake. 3,000 is not issue, but where the mistake learning and then I can apply this learning to other mutual fund also.
Definitely. Good, sir. So happy.
Thank you, sir.
Yeah, you're welcome. Okay. Anyone else? Shivnath Maruti. Yes, sir. You can unmute yourself. Yeah, just a moment. Okay, I'm just taking you in. Okay, another young chap. Yes. I
सर
become so happy. Yeah.
एक्चुअली मैं जो आपका फाइनेंशियल प्लानिंग का जो चार्ट है
Hmm.
वो बना है, लेकिन मेरा माइनस में जा रहा है। मतलब जो एक्सपेंस है वो माइनस में आ रहा है।
एक्सपेंसेस माइनस में आ रहा है, इसका मतलब है आपका इनकम जितना है इनकम
हाँ
से ज्यादा आपने प्लानिंग कर लिया।
हाँ हाँ हाँ।
ठीक है, इसलिए तो आपका प्लानिंग कम करना पड़ेगा।
खाली मैं रिटायरमेंट प्लान कर दिया है और चाइल्ड एक्स एजुकेशन का कर दिया है।
आपका ये है क्या है आपका प्लान है आपके सामने है।
हाँ है।
शेयर कर सकते हैं, आप शेयर कर सकते हैं, करना चाहते हैं
हाँ
और यू
हाँ
आर नॉट कंफर्टेबल।
करेंगे करेंगे।
करेंगे ना, ठीक है, आप शेयर करिए। जस्ट अ मोमेंट, जस्ट अ मोमेंट।
स्क्रीन शेयर करना है मेरे को।
हाँ, आप स्क्रीन शेयर कर लें इफ यू डोंट माइंड। आपको
हाँ
नहीं
चलो।
करना है तो नहीं करना,
नहीं 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 करना है मेरे को।
करना है ना। हाँ, आप शेयर करिए,
ओके।
स्क्रीन शेयर करिए। कितना आपका रिटायरमेंट के लिए कितना इयर्स बाकी है?
22
22 इयर्स बाकी है। ओके।
ऐसा आ रहा है यहाँ।
इसका मतलब है आपका नहीं, आपको कम करना पड़ेगा। यू हैव टू रिड्यूस इट, क्योंकि नेगेटिव नहीं जा सकते हैं ना। अब नीचे आइए, तो नीचे आइए। यू सी नॉन डिस्क्रिशनरी एक्सपेंसेस है आपका 7,000, राइट?
हाँ हाँ हाँ
नॉन डिस्क्रिशनरी आपका 7,000 में आपका सारे के सारे खर्चा आपका निकल रहा है।
हाँ निकल रहे हैं।
निकल रहा है, राइट? तो आपको 20,000 क्यों चाहिए?
मतलब अभी मेरे पिताजी को तो 15,000 लग रहे हैं, वो भी रिटायरमेंट है
हाँ
आज की डेट में। तो चलो
हाँ।
पिताजी 15,000 में कर रहे हैं तो मेरे को एटलीस्ट 20,000 लगेगा।
अच्छा, नहीं ऐसा नहीं है, आपका 7,000 में आपका चल रहा है सारे के सारे।
ओके, तो मतलब वही मेरा एक्सपेंस इधर ज्यादा लिखा है, मैं 20,000।
हाँ, बाद में आपका इनकम ज्यादा होएगा ना, हम लोग फिर करेक्शन करेंगे ना।
ओके।
समझ में आया ना आपका?
हाँ
7,000 रुपीज आप आज लग रहा है आपका रिटायरमेंट में। पिताजी का क्या है, आप छोड़ दीजिए, पिताजी का पिताजी है
ओके
अपना।
ओके ओके सर जी।
ठीक है,
मतलब मेरा मंथली अभी 7,000 में चल रहा है, तो यहाँ प्राइस टुडेज एक्सपेंस प्राइस 7,000 ही डालना पड़ेगा।
7,000 में चल रहा है, राइट? तो आपको रिटायरमेंट में इससे ज्यादा लगेगा या कम लगेगा?
हाँ
आज का
मतलब
हिसाब से, आज का हिसाब से
थोड़ा 3,000 कम या एक्स्ट्रा लगेगा, 10,000 लगेगा आज के।
कम ही लगेगा, ज्यादा
हाँ
नहीं लगेगा।
हाँ हाँ।
ठीक है, ज्यादा नहीं लगेगा, कम ही लगेगा, क्योंकि आज आप 7,000 में आपका चल रहा है, तो आपका रिटायरमेंट के बाद, ठीक है, अभी अभी आज के हिसाब से आपको इससे कम ही लगेगा, क्योंकि बहुत सारा खर्चा है आपका। व्हेन यू रिटायर तो वो सब जरूरत नहीं पड़ेगा।
ओके
करेंगे, फिर भी आप 7,000 मान लीजिए,
ठीक है।
करेंगे अभी। बाद में धीरे 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 करके जो आपका जब इनकम बढ़ेगा ना, तब हम लोग बढ़ाएंगे ना। अभी
ओके
आप देख लीजिए, अभी आपका इसमें किसमें आप ये कर रहे हैं?
7,000 इधर कर दिया मैं, तो ये यहाँ
7,000
मेरा एडजस्टमेंट करना है मेरे को।
अभी इसमें एडजस्टमेंट कर दीजिए आप। इसमें ये 3 लाख का आपका ये मार्केट वैल्यू है पीपीएफ में।
हाँ ये सर मेरा एनपीएस जाता है, एक्चुअली एनपीएस है अभी मेरा, इतना एनपीएस जमा हुआ है।
ये कितना देगा आपको? 7.1% देगा, कितना देगा ये?
हाँ तो वो दे देगा एक्चुअली, मतलब
7.1%
हाँ
देगा।
हाँ हाँ।
अच्छा, तो आपका और मंथली आपको इतना 5,000 डाल रहा है।
5,000 जा रहा है मेरा
5,000,
एनपीएस में
तो
मंथली।
आपका तो इससे तो ज्यादा ही हो गया। आप 6 लाख चाहिए आपको, तो 9 लाख आ रहा है यहाँ से। सॉरी, 6 करोड़ है, 9 सॉरी 67 लाख चाहिए ना आपको। आपको 67 लाख चाहिए फ्यूचर वैल्यू, है कि नहीं? ऊपर जो है,
हाँ
ऊपर, हाँ, इसके नीचे 67 लाख चाहिए आपको। यहाँ 91 लाख आ रहा है,
ओके।
तो आपको ये तो जरूरत ही नहीं है, बाकी दूसरे कुछ किसी में डालने का जरूरत नहीं है, इधर ही आपका सरप्लस हो रहा है।
ओके
करेंगे,
गेट
आपको इतना एक्सेस 1,25,00,000 आपका एक्सेस हो रहा है।
ओके, मतलब एनपीएस से मेरा हो रहा है।
एनपीएस से ही आपका हो रहा है
ओके।
इस हिसाब से। अभी क्या है, अभी आप आगे जाएंगे, आपका इनकम बढ़ेगा, फिर हम लोग जब नेक्स्ट टाइम रिव्यू करेंगे ना, तब धीरे धीरे बढ़ाएंगे ना।
ओके
तब लगता है नहीं हम लोग को थोड़ा सा ज्यादा चाहिए, क्योंकि इन्फ्लेशन भी होएगा।
हाँ हाँ
ठीक है, 10 साल बाद आपका 7,000 ऑटोमेटिक आपका 8,000 होएगा, इनकम बढ़ेगा तो 12,000 होएगा, 15,000 होएगा।
ओके
ठीक है, अगर आपका इनकम भी बढ़ेगा ना तो हम
हाँ
लोग करेंगे ना।
हर साल तो 10% बढ़ने वाला है मेरा,
तो
22 साल तक बढ़ते ही जाएगा।
सो एग्जैक्टली, सो आपका तो इधर से एनपीएस से सब कुछ आ रहा है, ज्यादा ही आ रहा है।
ओके सर जी, वो मैं 20,000 वहां डाला था, इसके लिए प्रॉब्लम हो रहा था।
हाँ, तो इसमें ये जो 5,700 है ना, ये आपको जरूरत नहीं है। मिड
ओके
ड्यूरेशन डेट फंड ये जरूरत नहीं है, जीरो कर दीजिए।
ओके
ऑटोमेटिक जीरो हो जाएगा वो, फिर भी आपका एक्सेस ही है।
ओके, तो भी दिखा रहे 2 लाख एक्स्ट्रा।
ठीक है, अभी ऊपर जाइए, अभी देखिए, अभी यहाँ आप दूसरा प्लान में आप डाल दीजिए, यहाँ
एक मिनट जल्दी।
ऊपर
यहाँ
जाइए,
-5,000 आ रहा है।
फिर भी -5,000 आ रहा है। वो -5,000 आप कहीं से और एडजस्ट करना पड़ेगा। किधर 5,000 लगा?
ये लड़की का एजुकेशन के लिए डाला था,
हाँ, वो थोड़ा कम करना पड़ेगा।
वो अभी के वैल्यू से, मतलब इंजीनियरिंग के लिए 10 लाख कर दिया था मैं।
10 लाख कर दिया ना, अभी ये थोड़ा सा अभी कम करना पड़ेगा। तो इसलिए अब नीचे आइए, आप किधर डाला था ये, किधर डाला ये? 15,000 डालना पड़ेगा क्या? नीचे आइए, कितना सरप्लस कितना है ये, नीचे आइए और नीचे आइए।
माइनस में दिखा रहे हैं।
ठीक है, -27 ठीक है, मगर ये 10 लाख का आपको 10 लाख नहीं, कम कर दीजिए, बाकी आपको एजुकेशन लोन लेना पड़ेगा।
ओके, तो ये 8 लाख कर दूं?
8 लाख करके देख लीजिए। ठीक है, ये अपने आप हो जाएगा, अपने आप हो जाएगा। तो यहाँ आपको मिड ड्यूरेशन फंड 8% में डालो है ना, तो यहाँ आपको कम डालना पड़ेगा ना।
15 लाख, तो ये
15,000 में 10,000 कर दीजिए।
10,000 11,000 लगेगा।
देख लीजिए डाल के।
11,000 के आसपास लगेगा। माइनस में एक, मतलब 11,200-300।
आपका नहीं आ रहा है, मेरा आपका स्क्रीन फ्रीज हो गया,
नहीं आ रहा
दिखाई
है
नहीं
मुझे।
था।
हाँ ओके ओके, आपके यहाँ नहीं आ रहा है, मेरे यहाँ देख रहे हैं।
ठीक है, मगर टैली हो गया, टैली हो गया, और आपका स्क्रीन नहीं दिखाई दे रहा है, फ्रोजन हो गया, फ्रीज हो गया पूरा स्क्रीन। टैली होना
ओके
चाहिए,
ओके।
टैली हो गया।
हाँ अभी 15।
11,000 में, 11,000 में हो गया। अरे नहीं। Okay, Mr. Souvik Poddar, it is there is a plan, Reliance Nippon. Okay, just a moment. Okay, a lot of plans. Okay, okay. First, Mr. Souvik Poddar, where can we get this Excel with elaboration? Souvik Poddar, can you just come online? Hetnos, I am just coming to you. Okay, just a moment. Souvik Poddar, can you come online? Mr. Souvik Poddar, can you come online? Just can you just click this? Hetons, I am coming to you. Okay, I have seen your question. Because this technical parts, we must be very clear. Okay, Souvik Poddar, are you there? Can you hear me? Mr. Souvik Poddar, can you hear me? Anybody facing any issues, like where these things are? Where these things are? Like just now we have discussed one, right? What? Excel sheet. Where will you get this Excel sheet? Tell me, where will you get this Excel sheet? Where do you get this Excel sheet? Souvik Poddar, can you just click reactions? Can you just click reactions somewhere and then click, I think in course somewhere, yeah. So which code? Where? Yeah, so this is, you must know this, right? You must know this. Retirement planning, yeah. You see, everything that we are discussing here, all this Excel sheets, they are there. They're invaluable. Right? Yeah. I cannot remember what is the module. Like this just now, this Excel sheet we have discussed. So he has done his workshop. Okay. So after workshop, he has got the knowledge to do this. Got it? So don't worry. But that Excel sheet, that the Excel sheet just now we have discussed, that is the masterpiece. That is at the end. After having all the knowledge, you'll get that Excel sheet. Okay, so it is there. Still, you can. It's not that you'll have to wait for the workshop. Today, just now, you can go to the last module and you can download it right now. Right now, you can do that. You could have done it on Monday itself. All the Excel sheets are available there. Any point of time, you can download them. Understood? Got it? Yeah. But first, have knowledge. Because a lot of people have this. Okay, why I am wanted to speak to you, because a lot of people has that doubt. In fact, I have seen in a workshop also, there are a lot of people, sir, where are these things? Okay, when people are discussing and calculating, like there are some people, where are this? That may happen. Okay, that may happen. Okay, so that's why I want to make sure that everything is there in the download button. There is a download button under every session. In the download button, whatever is relevant, whatever we have discussed, you will get the download. Got it? All of there. You don't have to make anything. Only thing is that you need to have the knowledge. And now you have seen it. So he's making the plan. He's investing in some places, right? All this knowledge you need to have. Calculation will be done by this calculator, but you must understand it. If you do not understand it, you do not know what you are doing. Okay, that's why this knowledge is important. Got it? Yeah, yeah, Mr. Hetans. Yes, you can unmute, Mr. Hetans. You can unmute. Can you unmute? Yeah, and you can switch on your video. Yes, sir. Just a moment. I am taking you in. Yeah, I have seen you have posted a very big question.
Hello, sir. How are you?
Yeah, I'm good. Good. So how is going?
Good, sir. Going on. Thank you.
Okay.
So, sir, my question is regarding the Reliance Nippon fund, right? So what they are asking is 1 lakh every year for a 10 years. Okay. And for that 10 years, they are giving 16,500 rupees return as well. Right. Upon 10 years, from 11 to 14 years, they are giving 1,30,000. Okay. Return. And on a 15th year, they are giving 16,50,000. Right. So I had calculated that in the sheet. So if I can able to share it now.
Yeah, please do that. Yeah. Yes, I'd love to do it. I always like you work.
Yeah.
Okay.
Then, sir. 1 minute, sir.
Yeah.
Asking me for some preference. I don't know what.
Can you share it? Okay, it's a sharing is allowed. You can share it.
Yeah, it's hold on. It's asking me for some system settings. Hold on. System security privacy grant. System security.
You are doing it through computer, right? So you can.
Yes,
I don't
yes,
know why.
yes.
It's very simple.
Maybe some 1 minute, sir.
Yeah, no issue. Yeah, Shavik Poddar, one more time. Can you get the Q&A session recording? Yeah, you can get the recordings. The recordings are it is in YouTube. Okay, you are all live streamed in YouTube, right? So apart from that, you will get this link in our this Facebook group. These links are there, and somebody can also copy that link in the group also. Okay, it doesn't matter because it's already there. Yes, sir. These recordings are available. Yeah. Now, yeah.
So I hope, sir, you can able to see it now.
Yeah, I can see that. All of us can see that. Okay.
Right. So I had done it in a 2 ways. This is option 1, and this is option 2. Right. So 1 is whatever the cash outflow, which is 1 lakh rupees per year. Okay, and I'm getting a return of 16,500, and then 1,30,000 and 16,50,000. Right. So
okay.
IRR, I'm getting 6%. So is the right way I'm doing it, or
No, there is
second option
an
is better?
issue. Yeah. No, yeah, this is better. This is better. This is like, correct way. Means
option
1,000. No, option 2.
Option 2 is better, right?
Option 2 is better. Yeah. So this is the correct way. You'll have to give
Okay.
net cash flow.
Okay.
So minus
Done.
83,500 is the net cash flow, right?
Yeah, correct. Because
Okay.
I'm giving 1 lakh and I'm getting 16,500 kind of thing.
Okay. So okay, fine. So yeah, this is the correct way.
This is correct one. Oh,
This is correct.
done.
So 11% you are getting. Can you give just
Yeah.
increase 2 decimal points? Increase the
Yeah,
decimal
sure,
points.
sure. I will. Oops.
Okay, 10.89%. Yeah, 11%. Yeah, yeah. I think this is what you are getting.
So
This is
I
correct.
think it is okay, right? Because it is above the inflation rate.
Yeah, it's okay. Now it depends, right? Now, if you think it's okay, it's okay. We're getting
Okay.
it.
Yeah, getting it.
So
getting
now,
it.
yeah. So this is up to you. So those who
Okay.
are very aggressive, for them, like, it's okay. Like, I'll not go for it. Okay. And if you are like, if you are this, absolutely, like, your personal choice. So this is
Yeah,
again where
understood.
they're investing your money.
It's a Reliance Nippon fund.
Reliance Nippon, but what is the portfolio? You have you done the workshop?
No, workshop. I
No,
have not
okay,
attended.
okay. So that's fine. Okay, in the workshop you will
I'm
understand.
the new to the group.
You're new to the group. Okay, fine. In a workshop, you'll understand. We need to look at so many things about the mutual fund. Okay.
Okay.
Reliance, actually, really speaking, Reliance Nippon doesn't speak anything. Okay. We need to look at so many things about that mutual fund. Okay.
Okay.
So that you will understand when we will be doing the workshop.
Absolutely. Sure.
Got it?
Got it. Thank you. See you.
Yeah. See you. Don't miss the workshop, huh? 24, 25th. Yeah.
Done.
Okay. Okay, then who else? Cinema, sorry, sir, my network problem and laptop. Yes, Srinivas, Shivnath. I've done my FF. Okay, fine. Okay, you have done it? Shivnath? Done? Type done. Solve ho gaya? Solve? Shivnath? Again, network problem. Okay, guys, 9:39 already. If you guys do not have any question, then I can go and yeah, I'll be here only, but at least like I can have something done. Hoega, definitely. Definitely it will happen. Got it, Shivnath? Hoega. In value resource, I am not able to find Akshay Kundal. Okay, don't worry, Akshay Kundal. Okay, Shivnath, yeah, I am just taking you in. Just a moment. Yes, problem solve ho gaya, Shivnath. Unmute. Can you unmute?
Yes.
Yeah.
हाँ सर हो गया
हो गया? Yeah, होगा ना? Definitely होगा. Right? Okay, that's great. Yeah. Thank you so much.
Okay sir, thank you.
Akshay Kundal in value resource, I am not able to find. What you are not able to find? Index funds? No, it will be there. Mutual fund, these things are not there. Index funds, I cannot remember. Okay, just a moment. Let me see. Large fund is there. Yeah, large cap funds are there. Index funds are not there. Just a moment. Funds. Okay, index funds is not there. No? They have a sectoral fund. Okay, might be it is because of this. Like, you see, there is in case of index fund, there is nothing much to do. So far, research is concerned. Why? This is the most passive fund. Why index fund is? That's why I think that they are not there. You see, when you are doing, okay, when you are investing in index fund, or when some fund manager, they are investing in index fund, they don't have to do any stock selection or anything. Okay, they don't have to do anything. Stock selection, they don't have to do, because of this 50 stocks only they have to invest. Only thing is that the weightage they can play with. That is the only thing they can do. They will play with the weightage. They will try to give you slightly better return, or like better return than the index itself. Okay, but that is also very difficult. That is also very difficult. Okay, so that's a passive. So you don't have to do much research. I think because of that, value research is not taking it. So whatever is the index, your fund will also give like 1 or 2% plus or minus. It will be give that much of return only. So there is no separate research is necessary. Okay, so it is not it is not worth that much of effort actually. That's why they are not doing it. Right? Don't worry, because large cap, when it's a large cap, it's a big thing, right? So it's like the fund manager need to understand what are the stocks he should invest in. In case of indexes, they are decided already. That's why. Higher low in India. B Pratik, bond yields are high or low in India. You see, for bond yields, normally you can do, just a moment. Okay, so here bond yield. In fact, I do just Google research only. I do not. I cannot suggest you specifically. You just go the 10 years bond yield. Bond yield. Okay, bond yield in India. So I look at here only RBI bond yield. Okay. So you see, I look at here. This is where I look at. Okay, so this is the 7-year bond yield is giving 6.52%. One year bond yield is giving 4.8%. Okay, so at the most, whoever whatever Google shows, I just go to that site only, right? So I do not follow any specific site as such. So 10 years government bond yield 6.61. So 10 years is it's a standard. 10 years government bond yield is 6.6%. So if 10 years bond is giving 6.6%, so yeah, so that is the benchmark. If you are investing for longer term, so you must get because this is being considered as the bond, government bond is considered as the, and they will give only government bonds only. Okay, Nikkei, Sensex, etc. So Indian 10-year government bond. Okay, so this is the benchmark. This is the safest. Okay, government bond is the benchmark. That is the safest. Anybody should give much better return than this. And you see 6% is again, don't think 6% is after 10 years. No, 6% annualized, right? We discuss these things in our CPC masterclass itself. Okay, each and every return, if not mentioned otherwise, is always annualized and growing. Okay, each and every return is compounded, annualized, and growing. Okay, so I have seen some people foolishly saying, okay, you see, this mutual fund doesn't give compounding. Okay, when you calculate out return, you are calculating compounding only. Right? Every return is compounding, if not mentioned otherwise. It's not whether the company is giving compounding, whether the mutual fund is giving compounding. That is a rubbish, foolish, idiotic statement. Okay. Understood? So whatever is the return, that return is compounding. That return is CAGR. So I have seen such kind of people doing a lot of arguments. Okay, do not invest in this fund. They do not do compounding. Well, you are calculating return, that is compounding. Understood? Okay. So thank you so much, guys. right? I'm feeling hungry. 9:47. Okay, so see you next Thursday. Okay, so go through the courses. Please go through the courses. You have seen, like, people are doing. You see, this gentleman, like, he has created beautiful plan for himself. So please do that, and that is possible only once you have the knowledge, right? Ultimately, that is the ultimate thing. You have your future in that Excel sheet that I have given you. Okay, and, like, it will improve it. So start from today. Like, it is like, as I have said, it's like missile going after its target. It keeps on going like this. Missile doesn't follow like this. It actually follow like this. Okay. Got it? Good night. We'll catch you on workshop. Yeah. Before a workshop, like, we have, there will be 2-3 weekly sessions, right? Every Thursday, because workshop we have only in February 24-25. It's 1.5 months. Okay. Because we have shifted it from the beginning to the end. Okay. Thank you. Bye. See ya. Signing off.